Going to look ahead at the markets for the coming week. It's going to be a reasonable week. I think we've got one core inflection point to really have to deal with from a volatility point of view, and that is going to be on Thursday when we get the release of the Core PCE inflation numbers month-on-month reading. Now, that's not expected to change at the moment. The forecast as we're recording this is for it to remain at 0.3, but you've got to pay attention to inflation data anyway, particularly in the US. But the fact that it's core inflation makes it so much more important because they strip out the volatile aspects of those inflation prints, primarily food and energy. So that the idea is you get a much truer reading of what the inflation reading actually is. But the fact that it's PCE inflation means that it's much faster than normal CPI that we use like in the UK. So it's a really good measurement of inflation in the US. So it's going to be an important metric to pay attention to. Now, the market that I want to focus on is going to be the S&P 500. I've already earmarked on my chart a week or so ago the broadening formation that you can see here. But the reason why I think it's quite important to focus on the S&P and the equities is because of the activity around the equity markets. We had very strong earnings from Nvidia, showing revenue growth of like 85%, absolutely massive. But the market reaction to that was relatively muted, meaning that we've probably got a lot of that kind of sentiment priced in already. And that makes it super, super important to pay attention to these equity markets, which is why the S&P 500 or the NASDAQ, if you prefer that, would be good markets to try and connect those fundamentals to this week with the inflation on Thursday. And the reason is that I genuinely believe that we've got a type of broadening formation now forming on the S&P 500. So if you get a sense that a lot of that from Nvidia, that kind of fundamental news is already priced in, it probably means that the pricing in means that the next move is going to be to the downside. So I want us to have a bearish view on equities, at least for now, to see if we can start to get some sort of a sense of losing momentum now in this uptrend that's going to help to confirm that this broadening formation is working the way that we think it is. Now, you can see it's here on a daily, and you can see that my original estimation of where that was drawn in, we've actually traded outside that quite heavily. Now, you can get a lot of bleeding outside of a broadening formation at a market top or a market bottom. It's one of the inherent qualities of that technical pattern, and it gives you a lot of license for a lot of leeway, and that is one of the reasons why I like it so much. So that's absolutely fine to sort of like still hold that view at the moment on the S&P. And what you could also do as well, I've debated already whether we want to sort of start to update it from here, but I'm not going to do that just yet because I want to see from Monday to Tuesday into Wednesday how the market plays out. Now, what I've been looking for, one of the great things about broadening formations is as the structure starts to expand, you get longer to make a decision, but you also get bigger runs in the actual asset class as well, meaning that you can buy and hold, or you can sell and hold and get a decent run relatively easily. So if you're looking for a lot of bang for your buck, a broadening formation is absolutely amazing. So the way that I would start to tackle this from sort of like a Monday, Tuesday perspective, if you dial it down to a 1 hour, what I would basically be looking for is I'd be looking to start to see on a 1 hour that you're going to start to lose these key levels of support in the current leg that we've got here. If you start to do that and then you get an RSI on your chart and you start to see that you've not got increasing momentum and it is starting to pick up speed to the downside, then that's a good license to think that the upper trend line, the original one that I drew, is potentially going to actually crack. And if that happens, we could be game on for a decent move down. Back to the daily chart, you can see it here. I'd be looking for a rundown in this, if it does actually work, down to this bottom support line here of around about, I don't know, 7,180, 7,200, something like that. A decent move from 7,466 where we closed on Friday. So if you get that structure, you tie that in with the inflation volatility on Thursday, plus the environment we've got with some of these earnings that are coming out at the moment, I think equities are a great market to play out. But I'll be keeping a very, very close eye on this throughout the week.